Hello, everybody. Today we start our series of Startup Leaders Club events, and today's topic is Global Crisis 2020 Fast Track to the New Reality, Series 4. And my name is Nadia Nesterova. I'm Independent Director of the Board of the National Alternative Investment Management Association and Investor Relations Advisor to a number of leading GPs globally. In private equity, venture capital, hedge funds, and real estate. And my co-moderator today is Tess Hall, venture capitalist, founder, chairwoman of Tess Ventures. And our speakers today include serial entrepreneurs and innovation leaders of tomorrow and inspirational leaders and drivers of change. So it's Bala Sarathi, chairman and co-founder of MoneyTap, Mikita Mikado, CEO of PandaDoc, Christopher Nurin, founder of Educated Ventures, Wolfgang Gensch, president of the Uber Cloud, and Michelle Borovak, CMO of WorkSport. So, and I give a word to everybody to start with a brief introduction on yourself and companies, and highlight briefly what impact do you see on the current crisis on your industry and business. Christopher, could you start, please?
Yeah, happy to. As implied by the name Educated Ventures, I focus on the education industry. Perhaps most relevant here would be the education technology, online education. And by and large, those sectors are benefiting. They're one of the relative few bright spots, I suppose, post-pandemic. Certainly, systems that are supporting students in the classroom, physical classroom, campus, any back-end technologies, as you would imagine, related to the real world and physical world, are deprioritized. I think, given the nature of university and K through 12 school district budgets, even for corporate buyers of corporate learning and training, they tend, well, not particularly fungible, they tend to be pretty predictable. And even those solutions that aren't currently being employed on campuses that are closed during quarantines, the budgets are pretty stable, particularly for here in the U.S., the publicly funded, the not-for-profit, government-backed universities. And so actually, even those solutions, I don't think, you're seeing contracts ripped up or, requests for refunds. Universities have had to refund tuition for the last semester as students were sent home. But that's left certain schools in a budgetary shortfall, but they'll find ways, whether it's through salary, freezes and others to right-size budgets. And in the meantime, with all these schools, K through 12 and all the way up to corporate adult learning, having to, if not already online, move online. In the US, 14% of higher education is already delivered through 100% online. In K-12, it's, as you'd imagine, much more traditional, and less than 1% of students study at home, strictly online. Now that's changing dramatically. Everyone's online, one way or another, at home. And so I think the Zoom-like companies within education, those that have more of an education customized online learning portal, whether that's a learning management system or, like Instructure, which recently went private, or smaller niche players, or marketplaces of online courses, popular trends towards these massive online open courses, the Coursera's and Udacity's of the world that you might have heard of, or specific targeted educational sites like that would deliver coding training, like Pluralsight. Those are all doing quite well. Those that are publicly traded stocks are up. You're seeing pretty healthy venture capital raises even. The newest unicorn in edtech was just minted today, a company called Quizlet, raising at $1 billion value. So in general, I would say, the direct delivery of online curriculum and content, whether for K through 12 students, higher ed, or just for adults, is actually doing quite well.
Thank you so much, Christopher. And Wolfgang, would you also start with a brief intro on yourself?
Yeah, thank you very much, Nadia. So my name is Wolfgang Gensch. I'm co-founder and president of UberCloud. And in previous years, I basically started with scalar computers, then vector, parallel, gradient cloud computing for mostly engineering applications, software-based simulations of any kind of product developments, etc. And our company is UberCloud, which provides cloud with what we call cloud with one click, a secure on-demand browser-based self-service platform for engineers and scientists to build, compute, and analyze their engineering workflows. We founded UberCloud in 2014, and we are located in Los Altos in Silicon Valley, close to Tess, basically. So our customers are mainly in markets like manufacturing, life sciences, oil and gas, which today more belongs to energy, and financial industries. So the impact of this current crisis on especially our market segment, right? As Christopher already mentioned, we are also belonging to basically moderately, I would say, the beneficiaries of this pandemic, in that we have built a technology which is called software containers, which are sitting on standard base containers. Name is Docker. But we developed high-performance computing capabilities on top, which are now similar to a virtual desktop, but sitting now on much more powerful computing resources than on the engineer's desktop. Many of our customers, their engineers are still working with workstations. These are powerful systems, but they are just, as we call them, single node. So just one server-based computer. And while we are now taking them to the cloud into an high-performance computing world, right, where they can sit on many server compute nodes. So offering a productivity boost of like 5x, 10x, or even we have customers with quoting like 30 or 40x for simulations. Instead of doing one simulation at a time, now they can do parameter studies over like 50 simulations, for example, with slightly varying parameters, and running completely in parallel, each parameter on one compute node, etc. And if you have 50 parameters, that's already a speed up of 50, which is really amazing these days. But we'll get back to this kind of improvement and next generation of computing simulations. So what our customers did before COVID in the office, most of them are continuing now as work from home in the ideal scenario. They can access their familiar environment, their traditional environment, like simulation environment, now in the cloud, in any cloud, by the way, because these containers are standard-based. So they run on any platform, like most modern one is Kubernetes. Therefore, they don't care if they work in the office or so like on-premise or in the cloud. So we'll get back to that later in more detail. Thank you.
Thank you so much, Wolfgang. And Nikita, would you share your background?
Hey, what's up? My name is Nikita. I'm the CEO of PandaDoc, which helps thousands of organizations to streamline their sales documents and sign documents online. The impact of COVID on our business is twofold. On one hand, world's economy is hurting and a lot of our customers are hurting, and that's very unfortunate. On the other hand, the need to digitize only increased as a result. We're getting a lot of leads and a lot of business these days, because how else are you going to close deals other than digitally with something like PandaDoc? How else are you going to sign documents? To respond to the pandemic and the global crisis, we actually launched a free e-signature solution in order to help those that can't meet with customers right now, or prospective employees, or just anyone, to help them sign documents electronically, and also help those affected by the crisis financially to save money. So free e-signing from PandaDoc, that's kind of how we are responding to COVID.
Thank you, Nikita. And Michelle?
Sorry, trying to get unmuted there. So I'm Michelle Borovac. I am the Chief Marketing Officer at WorkSpot. And WorkSpot is a SaaS platform that runs on public cloud infrastructure, like Microsoft Azure, for example. And it enables IT organizations to securely deliver Windows 10 cloud desktops from any cloud region around the globe. So in terms of impact on our business, we're really one of the lucky companies at this time, much like Wolfgang, it sounds like. As our product really meets a critical need for organizations that need to quickly shift to remote work. We, for example, saw 5 times our expected revenue in Q1. So really substantial growth and expansion from our existing customers, as well as from new customers. Our customers typically had a subset of workers running on WorkSpot, remote software developers or CAD engineers who needed to access high performance workstations from home or their office or their job site. These companies were really able to add WorkSpot cloud PCs in days, or in some cases in minutes, to support the increased demand for working remotely. And interestingly, we've heard from our customers that they're seeing increased productivity from people working from home, which I think was really notable. It's really changing the mindset for many executives and executive teams as they think about how to move forward when this immediate crisis subsides. And they are looking at incorporating remote work from into the future.
Thank you, Michelle. And Bala? Can you unmute yourself, please?
I'm doing this on way too many Zoom conferences where I keep talking without unmuting. My name is Bala, and my background is that I lived in the Silicon Valley for 17 years. I've done a number of startups there. The largest one was a company called Snapfish, which we sold to HP a while ago. But now I live in India. I've done various things in India, including work for the government of India for what is probably the world's largest payment platform called UPI. But after that, I was a venture capitalist in a fund called Tess. I started an online education called Quizzes, which, like many of you pointed out, is seeing some very good tailwinds because it was a US focused company which is focused on K through 12. It's like Quizlet, but classroom learning digitally. And they've seen their MAUs go up 2-3x in the last few months. So they're seeing huge tailwinds because of this. But what I do right now is I run a fintech company called MoneyTap. MoneyTap is a It's a credit product. It's a line of credit on an app for where you can download the app and in a matter of minutes will evaluate you and give you a credit line and you can borrow against it. And we've done fairly well. In the last 3 years, we have grown to about $200 million in our book. And a few months ago, we expanded into Vietnam, which is an interesting market, which is one of those rare countries which is actually not affected by COVID. So we're seeing some very strong trends over there. And I'm also on the board of a company called Healthify. Healthify is India's largest health platform. So it's an app which is basically focused on online fitness and online, as the name says, Healthify, online health. And they are seeing just humongous tailwinds, just demand through the roof. So it's very interesting to see how, while some parts of my other companies or my portfolio, where things are slow, health and education seem to be like interesting areas where there are huge tailwinds. Along with Michelle, what you're saying, and Wolfgang and Nikita, where there are a few areas where I think maybe if you're in the core tech, I'm sure it's like a 5x. These guys are seeing maybe like 2 to 3x in education and health growth because of COVID.
Thank you, Bala. We have a great contribution from projects from Silicon Valley today. And I also introduced my co-moderator today, Tess Ho. She's also from Silicon Valley, and she has also a Hong Kong background and can also serve a bridge between different approach across the world. Could you also brief on that, Tess, and introduce yourself? Thank you.
Thank you, Nadia. So yeah, it's always great to be helping to be a speaker on the panel and help moderate, co-moderate with Nadia. So yeah, I'm in Palo Alto, mainly because I started a company in undergrad, and by the time I graduated, my co-founder and I had several acquisition offers. So we decided to pick one of them and never look back. Obviously, with a lot of front loading the hard work, I recognize the founders at early stage go through quite a roller coaster ride, as we are experiencing right now with this pandemic. In that sense, I wanted to take what I learned and pay it forward. So I decided to start my own VC fund and invest, and also co-invest with a lot of like-minded people. So I thought Stanford was the best place to do that. Silicon Valley was the best place, so I can keep learning and keep growing and see how I can contribute to others. Having said that, that's why I started Tess Ventures. I am, the founder of that, but I have an amazing team that also is growing stronger and larger as we speak. I invest in early stage, and we have been proactively investing, advising in great companies at early stage. I personally, through other entities, have invested into several companies that are in different areas, and been very fortunate that these particular ones actually have exits and they've been acquired. So for example, one of them is in construction tech, the other one is in VR tech, and then also in biotech. So all these are early stage when I invested in the various entities that I had invested with. And what's really exciting is that experience allows for me to also, as an investor, really be able to provide value, hopefully from end to end. So from, the early stage to the guidance and whatever I can contribute to the exit stage. Sometimes I am able to help, founders with, potential acquisitions. And definitely, I also learn a lot from them. So with that said, in today's reality, which is like the new normal of what's happening with COVID-19, I've been able to apply some of the learnings that I've experienced from the past, and also from other seasoned mentors and investors and founders that actually have seen many cycles of various hardships. So with that said, I definitely felt it was a good time to really invest even more time in one of my top portfolio companies that is in regulation tech, and they also do biometric technology. That's exactly one of the biggest impact of what happened during COVID-19 days, is the adoption of touchless technology. That's why this particular company has been able to very successfully focused, and they are certified with FIDO 2, and they focus also on GDPR and CCPA, which all relates to privacy. So in this COVID-19 days, besides biometric, which is touchless, solutions where, reimagine the world without passwords, that has been very widely adopted, and they focus this on every single devices, and also, browsers. Second, the regulatory technology. Privacy is an extremely hot topic that was very, very, dominant and needed, and very, much discussed before COVID-19, especially with, Facebook's implosion of what happened with Cambridge Analytics. How is our data protected? How do we utilize, with such great technology as AI and ML, machine learning, how do we think about how data should be used between companies and users? So privacy, obviously, with COVID-19, needing to track, needing users, citizens to contribute their data, we need to really, be careful and thoughtful, and look for technology that actually do understand this, want to help educate us and safeguard us, but also allow businesses to thrive. So that's why I've been very excited in, helping my portfolio companies and any other founders that are focusing in these areas. As well, I also invest in fintech, blockchain, and continuous investing in biotech. Big supporter of female executives and female technology related to the female area, because there's a lot of issues that need to be addressed that have not been yet with technology. So there's pain points there, and definitely emerging markets. So Southeast Asia is also a focus. Happy to talk more and share more as offline or continuously in this panel.
Thank you so much, Tess. And we are also, we would like to address the question to all. So what new challenges and opportunities do you find in the current environment? Christopher, do you find anything different in today's crisis than maybe the previous ones?
I don't know if we have enough data points. Certainly, obviously, public markets. Actually, the issue with education is there's really very few publicly traded comps, but some of them actually are up 40-50% off their lows, even amidst this horrific week of stock market activity. In the private markets, I'm actually selling one of our portfolio companies. It's a K-12 science company, and it's a fine price. There's one of the unicorn kind of buyers that's seeking to fill out its curricular bundles for schools, and I was actually relatively surprised, pleasantly surprised. I think you're still, like I mentioned just today, this new unicorn $1 billion valued Quizlet, a company Teachable, which I'd followed for a little bit. Was reported to have sold at over 10x revenue, $250 million. So I don't know that we've seen that much of a pullback in valuations, just given the relative health bright spots, and in fact a lot of new money coming into the education sector. Maybe this will fall under a future question, but for this panel, but for the first time in like 10 years, I'm seeing a lot of just B2C investors and family offices coming around trying to see what's happening in education, given it is kind of a thesis that's percolated to the broader tech consciousness.
Thank you, Christopher. And Michelle, you're also in fundraising right now. So what are your observations? Do you see new investors coming in? And would you share something on that?
Sure. It actually is really interesting. We definitely, I think, like all startups, we're always fundraising, but we see that it's definitely easier to get meetings now. Meetings that used to take 3 or 4 weeks to secure because people's schedules were so busy are much easier to set up now. So they're happening much more quickly. I think it's going to be interesting to see with new investors if they're willing to, to write big checks to a company that's, sight unseen, that they've never met the team personally. So I think that's going to be a really interesting test of the system.
Thank you very much, Michelle. And Wolfgang, would you share your expertise on fundraising and actual experience which you're going through right now?
Yes. Fundraising in general is always a challenge, right? You have to fulfill a certain set of quite strong requirements. And every time a startup is close to these requirements, then because of the environment, because of competition, because of other influencing factors, these requirements are getting stronger. So it's, I know some startups which are basically trying hard to catch up with their major criteria, which is a great technology, a great team, and also 5 to 10 major well-known, renowned customers, and so on. And also the business model, which is more and more tending towards annual, like in the software business, like annual recurring revenue, which is important to get over a certain mark. And like everything as a service is another good criteria, which is getting more and more important. And now in this pandemic crisis, we see that VC money is again, I mean, we have these phases, right? Again, getting sparse. So it's like VCs are checking very carefully their portfolios and looking carefully to the companies which they believe they make it, and looking at others which are clearly not making it. And, there are sectors which are highly affected, and it takes 1 or 2 years at least until they recover. All the travel platforms, also things like those who are similar to Airbnb, for example, and rental car business and so on. Everything which is very close in this is facing really challenging times, which the recovery might take really longer, because people think twice if they should travel or not, and fly to some foreign countries for vacation or stay close to their homes somehow. So this pandemic has really changed the way VCs are looking at portfolio companies, and vice versa also. I mean, it's quite a challenge for startups to identify. I mean, only in Silicon Valley, I mean, there are hundreds of VCs, right? And worldwide, I mean, there's certainly kind of thousands, a thousand and more. But okay, now you want to identify the 25 which fit the best for you as a startup, which is a real challenge, right? I mean, I know this well. So I was part of founding 6 companies, and in something which people usually call niche market, which is engineering simulation, product development, design, etc. And okay, the whole market, the whole high performance computing market is in the order of 50 billion, right? So that's another important factor which you want to consider as startup, that you are staying in a winner market, so to speak. So who is a winner for the next future, right? Big companies with deep pockets, which can survive almost easily, through such crisis times. So yeah, if you watch carefully, like the VC community and stay in close contact. I mean, Tess is on the early investors side. So there are, these angel groups in Silicon Valley, which I remember well. We presented to 3 or 4 of them in the past. You can learn a lot when you do that, right? And I highly recommend to get close to these guys as early as possible, because they can give you feedback. The same as with 5 large customers who test your prototypes, etc. So feedback on the fly, so to speak, and don't try to develop a product with kind of 100% set of features and functionalities. I mean, the 80-20 rule is certainly very helpful because it's vice versa than 20-80 concerning time to development to develop these things. Okay, so that's it for now.
Yeah, thank you, Wolfgang. Nikita, would you share your observations? How is it going with your team? And what is the environment for you in terms of fundraising and in this scope?
Yeah, I'd say there was a slowdown on the fundraising end, but venture funds, growth equity funds, and debt providers still have capital on their balance sheet, and that capital got to get invested. So I think I feel like everyone was waiting and seeing for, I'd say, the first 2 months of the pandemic, and now the realization comes that this is not a short-term kind of flip. This is a long-term change to the environment. And, regardless, in that environment, people got to invest. So I think investors come back to the table, and I feel that. And the amount of inbound interest that we've gotten over the course of the last 3 weeks speaks to that.
Thank you, Nikita. And Bala, you're actually wearing 2 hats. You had experience as investor as well as a serial entrepreneur. So what are your observations and what you could share in that?
Sure. Let me first speak as an entrepreneur. I'm very, very glad I closed my round in January. So we did a fairly large round. Sequoia was in our round, and a number of New York-based large PE fund and a number of other players. So, but having said that, in my view, I think like Michelle said, as an entrepreneur, you're perpetually fundraising. So I feel like that's all I'm doing these days. But I think it's a fairly straightforward supply-demand question. So given that at least in Asia, which I can speak for, my company is headquartered in Singapore. So in our part of the world, a fairly large section of the startup activity has just shut down, right? Transportation, food tech. There's a fair amount of heavy investment that's been going around. And a lot of these activities have just shut down. So the lucky few are, of course, things like online health and online education. And so they are getting chased by obviously everybody, Zoom calls, term sheets on Zoom calls, etc., where normally which would have never happened without face-to-face. So they just, but everybody else is dead in water. So there's just not interest, right? Even if you're only down by 40-50%, which is, I would say, very good in this market, right? If you're only down 50%, those companies are also just not getting any attention. They are like, we'll come back to you, right? Survive, and we'll come back to you, mainly because of the uncertainty. So at least that's what. For example, passed some rules saying that forex, Chinese ownership in Indian companies, there has to get approval. So that does not help at all with respect to the investment. So that has definitely slowed things down further. And a lot of deals which were in mid-flight just got not just term sheets. I mean, things which were, due diligence done and, term sheets signed and things have got pulled. So, so from that point of view, that's been pretty bad. But I think if you're in the lucky few, education, work from home, but I think honestly, a lot of the core tech is really coming from the Valley everywhere in the world, right? Maybe Israel and the Valley. Whereas most of the other parts of the world are either into health or fintech or edtech or very some specific application level stuff, and those are getting highly impacted because of lack of demand and lockdowns. So India has had the most severe lockdown in anywhere in the world. So literally, we've been in deep freeze for the last 40 days. Right, most of the country have not slept out of. They're living in an apartment in the 17th floor. They've not even come down. Right, they've not taken an elevator down. Right, it's that strict a lockdown. I don't know how it is in the Bay Area, but here it's been extremely strict, and so all economic activity is just literally frozen.
Thank you, Bala. And Tess, would you add a point and maybe headline another round of questions to our participants?
Absolutely. So I think a lot of the panelists have some very good points and advice and insights. So maybe I can complement it with sharing about how it is fortunate for those who were able to complete a fundraising round right before the lockdown around the world. And like my own company, the company that I'm a key investor in and advising in, and also, playing a large part in helping them accelerate and expand the regulatory company, fintech, in biometrics and compliance as a service, and also identity eventually. That company, how they have approached it, and it was because I think I was able to have insights from what happened in December because a lot of my friends had family in Wuhan. So we saw how quickly the Chinese government locked down, and we saw that was becoming abroad globally with this virus that there was no vaccine yet. So I was able to share the insights. The point I want to make here is every team, if possible, truly try your best. Don't be shy to really tap in and lean into your advisory board and your strategic investors at this time. They are going to be probably a little bit more available because they're not, needed to be in different cities, on planes, traveling for meetings, and there's no travel plans. So this is a good time for you to build relationship with them and try to help each other out. I always believe in adding value to others first. That's one of the best, secrets, I think, which building social capital is the best form of currency. This is building relationships. People cannot say no. So that's just a philosophy I believe, and I, embody, and I, try to coach that to my founders. So a lot of these teams, the founders, when I invest, I truly do have a long list of diligence and a high bar, given that I'm fortunate I have a lot of experience. And one of the biggest point is I look for coachability. And in that sense, I think if founders sometimes embrace leading with vulnerability, I think it's okay, especially in this challenging times, to express authentically where you need help, how much help, and your advisory board or potential future advisors will understand, and you can actually build stronger bonds that way. So that's where I think is critically important. And with my particular this team, they have been able to do that. The founder has incredible domain expertise in fintech and payment, and lots of IP experience and IP under his belt. The team is complementary, where they have different skill sets, and they have great experience and a very good vision of what privacy and how to eliminate passwords in this world. And that's why I was very motivated to help them and accelerate their progress. Some other key, contacts that are in the privacy space, leaders and thought leaders, are someone like Anne Kavukian. She's a leader in design by privacy, design by security, and she absolutely educates the world about the importance of just not only companies embracing privacy and baking it into the technology intentionally so that it becomes more fluid and your companies are able to be more ready when regulation hits, and it has hit here in California with CCPA and in Europe with GDPR. So I think that's an amazing insight right from the early start. So I definitely, believe and have been, reading deeper and learning deeper into her thoughts, because I believe I agree with her that users also have to take control of their privacy and be able to express and kind of have bigger voice in how they want to see this, part of user data being used by companies. So I think, those are the few things that I would like to firmly insist on. And the biggest one is lean into your advisory board, to your investors, and also, pave your way for future ones right now. This is the best time. Thank you.
Thank you, Tess. Do you have a question to our today's participants?
Yes, absolutely. I would love to find out, how have you kind of approached, in terms of advising certain companies that have come to your, radar, or, which ones you think are some elements of, founders that you also felt were key characteristics that you saw, and how have they been thriving in this environment? Whether I think sharing some of the, battle scars are good, and sharing some of the successes are good. I think that will help a lot of the audience who, watch this, great series of platform that La Token and, Nadia and Elena and the rest of the people have put together. So I think, I would love to hear from each one of you, and, not all of us have to be investors, but maybe we've been exposed to different companies that we felt really useful, and, the characteristics of those founders, and, kind of how you've seen them thrive, or the challenges that really are facing, and, what happens to them at that point, or how to, kind of give them an insight into preventing this. So maybe Nadia can kind of help me ask each panelist.
Bala, would you join first with your investor experience? Bala, you're muted.
Sorry. Yeah. Sure. So as I said, if you are an entrepreneur, you're already off the ground, whether you're in a seed stage or whether you're, Series B, Series C, like where we are in MoneyTap. It doesn't matter. You're already started on a journey. So you are either in a domain which has got tailwinds, or which is maybe neutral. And I would say neutral is, if you're down like 40%, I would put you in the neutral category. Tailwinds is, you got tailwinds, right? You, like Michelle, you're saying like, you're just shooting your, overshooting a sales target. That's fantastic. So if you have tailwinds, I don't think you need any advice. You keep doing what you're doing. If you are either stuck in your in the same gear and it's just generally being impacted, or you are in one of the sort of the categories which is directly impacted and you don't know what's going to happen after COVID. Example, tourism, right? Anything to do with travel, we all know is just going to be severely impacted. That's like an obvious example. Concerts, movies, all those kind of categories, which we have no idea whether there will be demand or not, right? Even if shelter in place is removed and the world moves around, we don't know what's going to happen to those areas. So I think if you are depends on which bucket you're in. I think if you're in the first bucket, I think you're doing fine. You don't need anything, and you'll be doing great. But the challenge obviously is if you're in the bucket 2 or bucket 3. So what I've been telling all the entrepreneurs boards that I'm on is that first you need to survive to tell the war story, right? I often tell them the story of myself when I started Snapfish. This is 20 years ago. The company was less than a year old, and we were in the digital photo business. And we were having film processing in those days. We would send in a roll of film, and the film will come back to you. And September 11th, we just saw the planes hit the World Trade Center. And then like 3 weeks later, anthrax came. I don't know if many of you remember or know about it. And the US Post Office started irradiating mail, and all the film would have been like destroyed, right? This was our business model back in those days. And luckily they didn't end up doing it. Just miraculously, the company was saved. But we were sure that we were going to go out of business. There was a direct impact to us. But anyway, we survived to tell the story with a good ending. But I would say the first order of business is to survive, which means you have to conserve cash. You have to just cut ruthlessly. And at least luckily, most of the entrepreneurs I see, both my investments in the US as well as in India, are been just not wasted any time. They had to make the very, very tough decisions they had to do, which is just preserve cash, because you're not raising any money in this time. And once you do, then you have a little bit of luxury of thinking whether you need to pivot out or not. I think if you're in the category 2, which is you're just impacted because of stay at home, and there's no behavior change for the domain you're in, and the market will eventually come back. It might take 2-3 quarters or a year, but it will eventually come back because the customers are not changing their fundamental behavior. I think you just need to last it out. If you're in the third category, you better pivot. I don't think you have a choice. At least this is what at least my companies have been doing.
Thank you, Bala. And what should be the top focus of attention for entrepreneurs and startups in the current environment, so that we could summarize this type of keynotes for each? Volkan?
Yeah, I'm trying to avoid to repeat somehow Tess and Bala. It was sounded really complete. But one thing came to my mind, which is risk evaluation, right? So be better prepared for the different scenarios from the very beginning. You have a great idea, you have colleagues, people, etc. you want to work with, and maybe you have a prototype or even a product. You are moving towards round A, for example. So we are currently in pre-A, so disclose something. And every move you do, which we didn't do in the past, but now it almost seems obvious to do risk evaluation, check what-if scenarios. What if we face a crisis? How do we get through this crisis? Lucky if it doesn't happen then, but yeah, it's it's better to do it 3-4 times and instead of just none of it. So there is being prepared for the next storm, so to speak, is a very important aspect, which has not yet really touched by now. So, and what we have seen, some of the companies represented here, they are among the winners. So look carefully, study the winners, right? So it's another one. So why are they getting so almost seamlessly through this crisis, or even start accelerating? Education is a great example, right? I mean, I see with my grandkids now, every day they do this kind of thing here and get homework online. So there are a few things which are, in my humble opinion, becoming successful, which is, as I mentioned before, everything is a service. Which makes you independent of physical goods, physical products, etc. Another good example in my space is digital twins, right? So which will be more and more developed for like artificial intelligence, supporting your machinery, for example, or your production line in parallel and real time with a digital twin of the physical one, right? This is certainly will become very popular very soon in our space, and yeah, many more of these.
Thank you, Wolfgang. It's not only in machinery, but there are some projects who are doing digital twins and biotech for human beings. So it's a
exactly.
lot.
So I forgot one. Yeah, I forgot one important thing, which now that you trigger it, it is personalized medicine, right? So not medicine like you know, with so the same for everybody, right? You know, like taking drugs. When you look at the BiPAC description, but real personalized one. This is a big thing, which we are getting closer and closer now. But it has already been mentioned that you need to manage and handle big data, right? Because you need a lot of data from many patients to be able to basically try to match a new patient then with a certain group and draw conclusions of how you can best then help this patient. So this is another one which I really wanted to mention.
Yeah, thank you, Wolfgang. And Mikita, what would be your recipe for to not only survive but succeed in the current environment for our audiences? What should be the focus for investors and serial entrepreneurs as a key message of yours?
Be open to change. The environment changed around you, so why not to consider a pivot, be that in the way you perceive the world and act in the world and, you know, work, but also in the way that your business operates. As for the as for the investors, same thing really. The world changed. Okay, it's not the end of it. Life still goes on. It's just different, and there are going to be companies that will succeed in that environment. Just got to find the ones, but that's your job all along, right? So that's that would be my suggestion.
Thank you, Mikita. And Michelle?
Yeah, I was lucky enough to be able to attend a presentation this week by Jeffrey Moore, who wrote Crossing the Chasm, of course. And somebody asked him the question about how to make difficult decisions about laying people off during a situation like this. And his comment I thought was interesting, which was that businesses normally know what they need to do for the health of their company, and that delaying a difficult decision doesn't help the situation. So these times may call for really difficult decisions, and it's important to be able to be decisive. I think internally, just as we look at our company and this shift to remote work, I think it's exceptionally important to really over-communicate your plan. Make sure that people know what to focus on. With people working remotely, you know, there's going to be a need to communicate in different ways, but in writing, in meetings, on the phone, you know, just don't hesitate to feel like people may not understand what the direction of the company is, and it's just really crucial, especially now, to over communicate.
Thank you, Michelle. And Christopher? What is your message to investors and serial entrepreneurs to go?
Yeah, I would say, and you know, I'll take a quick anecdote from education that I think is broadly applicable. You know, amidst the rush of all the students returning to home to learn, a number of K-12 ed tech companies sought to capitalize and serve, and so offered their products free. Many had already been adopting a freemium strategy, but those that hadn't took this on and were just crushed by demand and traffic and requests. But now 2 months later, how much of that how many of them have really been able to figure out how to upgrade, to convert to premium, to monetize? I have examples of startups that actually had to, have their servers overwhelmed, and then had to shut off all service to everyone for a bit. Students are going to return, whether it, school day, back to school might slide from August to September, maybe October. So how much of that activity really is going to endure, remain, ultimately, monetize? Even, not just the parents. Parents in the U.S. aren't really used to paying out of pocket, except for upper income with tutoring and whatnot, test prep. But even schools right now are sort of seeking a lot of this product for free, or expecting such. So I would be careful of the noise and the false signals, false positives. If we think about what Bala brought up, September 11th, and what's really endured over the years thereafter. Obviously, a more onerous boarding entry for airports and certain offices. I guess Class A kind of office properties. You have a security, and you have to get a stupid little piece of paper you slip into a turnstile. Takes longer. Obviously, U.S. military and espionage spending, but really, life will return to normal in a year. I think travel. Look at the May 1st holiday in China. More young people were traveling than even expected. So I think it's going to rebound next year. So to the underfunded, more thinly funded entrepreneur, next year doesn't really help you between now and then. But I guess I would, I can't solve the pain points of funding in the near term trial. But I guess I would say don't get distracted and confused and diverted by some exceptional activity today. Don't think, there's a lot of mirages out there right now, a lot of behavior that in 2 years during cold and flu season, will Americans really can wear masks like, they do in East Asia? I don't know. I hope so. But I'm not sure how much of this behavior will really endure. So I guess I would encourage entrepreneurs and investors to, how many telehealth medicine companies have gotten funded in the last month? I see at least every other day, I see a new telehealth company. In education, so many homeschooling companies getting funded right now. So I'd really think about kind of false positives and false signals that, behavior that's not going to endure 1 year out.
Thank you, Christopher. And Tess, what would be the top priorities for startup leaders and investors as a key message to go?
Yes, I absolutely believe that really being capital efficient is very important. For those who are trying to have no choice but are raising funds, of course, we all know it's obvious it's not the best time, but some teams just don't have that luxury to choose. Then they just need to be really realistic with their valuation, and also be, if possible, to focus even more on their actual KPIs and revenue models and projections. I think those are very important. Obviously, the cost to acquire customers, really be strict on looking at those numbers, and figuring out the gap areas and how you can strengthen, like what is there that can be done. In the past, I think everyone was very busy, either marketing or being out there, or also building culture, which it is important. However, you need to kind of stack rank and prioritize what is most important and what is not, and force yourself to not drink your own Kool-Aid, and also not drink others' Kool-Aid. Instead, be have good self-awareness for the founding teams themselves, and also for the company, because it is only this way that you can progress and thrive in this pandemic situation. Along with the fact that what behaviors will still stay and may not. I do really believe that things will get back to normal. However, it's going to be a new normal. There are going to be certain habits and behaviors that will change. One is, I think, fully the world has really embraced remote distributed teams, distributed working environments. When I invest heavily in the last few years in the blockchain area, I definitely see that the blockchain area, because it's such a global dynamic, teams already were distributed and very efficient, in fact. And that's why a lot of these work apps were able to, really become even more widely used. And with this pandemic, it actually even forces the ones that were resistant in, getting on a video call, setting it up, learning how to present, how to use it. But this, no matter what age, from young children to grandparents to, everyone that said, no, I don't want to do it, everyone has already been set up this way to be able to access it. So I think even after this pandemic, after COVID-19, we move back into the new normal. I will think and see that the world is really going to be working differently. Team structure, team dynamics will be very different. So those are the areas that I think technology companies will see becoming more important, is how to track efficiency, how to track productivity remotely. So these are some areas that maybe, some budding founders and entrepreneurs can look at. Thank you.
Thank you so much, Tess. And I thank all the participants for today's Startups Leaders Club, and welcome you to participate in our further events, industry specialized events. We have every Tuesday, Thursday, and Friday. And in a couple of minutes, I will also introduce a number of keynotes today from FGC Group, keynotes from Tony Evans and Kingsley Kobayashi, co-founders, who would also address the topic how to make returns in these market conditions. So I think it will be vital after our today's discussion. Thank you all. Stay safe, and all the best wishes to you, your family, friends, and your companies, first of all, to survive and succeed in this current environment.